Governorship of the central bank is not meant to win one votes or Facebook likes. We're neither hawks nor doves. We're actually owls.
I will still be around somewhere in the world, probably a lot in India, so don't write me off.
You are watching the final act with me, Krishna Kumar. It is Raghuram Rajan's last policy review as the Governor of the Reserve Bank of India, and it was status quo as expected. The central bank left interest rates unchanged and the tone was dovish. The policy stance remained accommodative despite the rising risk of higher inflation, and the estimate for value-added economic growth unchanged at 7.6%. Governor Rajan hailed the progress towards GST and said that the return on investment will rise. Let's first listen in to the man himself.
We are within the inflation band given to us by the government and expect to be around 5% CPI inflation by March 2017, absent unforeseen eventualities. My hope is the next monetary policy statement will be by the proposed Monetary Policy Committee. The committee to select outside members of the MPC has commenced the process. On the RBI side, the board has selected Dr. Michael Patra to be the RBI board nominee on the MPC. The other two members from the RBI will, of course, be the governor and the deputy governor in charge of monetary policy. With the formation of the MPC, the government and the RBI will have completed a fundamental institutional reform which modernizes India's monetary policy framework and builds a platform for strong and sustainable growth. Some of the collateral benefits over and above low inflation will be a currency that is not depreciating constantly, higher real returns earned by savers, and lower nominal interest rates, including inflation risk premia paid by borrowers. A larger share of the policy statement than usual was devoted to a discussion of liquidity and how we see it going forward. As we have reiterated in the past, we do not see the FCNRB repayments as disruptive. With the preparation we have made and good management, redemptions should go smoothly. More generally, the new liquidity framework announced in the April policy is being implemented. We have reduced some of the structural liquidity deficit. However, the current surplus is partly because of seasonal factors and not because we have eliminated the structural deficit completely. To emphasize this point, we announced an open market purchase today. The RBI will proceed in a calibrated way towards the goal of eliminating the structural deficit. When we have done so, episodes of systemic surplus and systemic deficit should be evenly balanced. Now, despite easy liquidity, banks have passed past rate cuts into lending rates only modestly. Earlier, some bankers said that it was the lack of liquidity that was holding rates high. Now, I hear from some that it's the fear of the FCNRB redemptions that is making them reluctant to cut rates. I have a suspicion that some new concern will crop up once the FCNRB redemptions are behind us. On our side, having examined our experience with the MCLR framework, we will shortly be suggesting some revisions. However, substantial pass-through will happen only as corporate credit demand picks up and as public sector banks, strengthened by clean balance sheets, compete for corporate business. In the next few weeks, we plan to announce guidelines for P2P lending and for account aggregators. On August 25th, we will unveil a new set of measures to improve the functioning of markets, especially the corporate bond markets. Some of these measures will build on the suggestions in the recent Khan Committee report. Before I end this statement, let me use this platform for two important messages that initiate the year-long public awareness and consumer protection campaign the RBI is going to embark on. First, one of the biggest sources of harassment for ordinary customers in the banking system is meeting KYC or Know Your Customer rules. Actually, these have been simplified considerably in the recent past, but sometimes your local branch may not know it. The applicable KYC rules can now be accessed from the RBI's web page by clicking on a bar entitled FAQs for KYC. It was put up this morning. For instance, if you move, your new address can be self-certified and you do not need proof of new address. If your branch does not know these simplified norms, please go to the RBI web page and point it out to them. You will be doing a public service. Second, if you get an email from me or any future governor promising to transfer a large sum of, say, rupees 50 lakhs to you, if only you send a small transaction fee of rupees 20,000 to a specific bank account, delete the email immediately. The reality is such emails are not from me, and the RBI does not give out money directly to ordinary citizens, even though we print plenty of it. While the emails usually contain very convincing reasons why you've been chosen to receive the money, ask yourself why I simply cannot deduct rupees 20,000 and send you 49.8 lakhs. If you think for a moment, you should not fall prey to such emails. This is my last policy statement, but there are still 28 days in my term, which I intend to use fully.
So I wanted to follow up on this inflation bit. You sound worried about inflation. You are flagging off concerns, but somehow your policy doesn't talk about the GST inflation impact at all, even though you're talking about the 7th pay panel and you're talking about household expectations rising.
It's premature to talk about the inflationary impact of GST when we don't know what the rates will be. As the rates are set, one can get a better estimate. And as I said, the experience of other countries, for example, Malaysia, has been that the inflationary impact, in their case, there was an inflationary impact, but it was short-lived. What is important is we have to see that the price adjustment, if there is one, conditional on GST coming in, doesn't become generalized inflation. A lot depends on which prices go up, which prices come down. Some prices may also come down. And are these salient prices, not so salient prices? So I think it's premature at this point. The RBI currently is focused on meeting the glide path target of 5% by March 2017. We don't visualize GST obviously coming in before April 2017 at the earliest, and therefore this is outside, in a sense, the short-term horizon for which we are planning, but it has to factor into the medium-term horizon. That said, before we know the numbers, it is premature to talk about it.
I will just follow up on NPAs for a bit because you've given a long answer and Mr. Mundra did exemplify that further, but are you satisfied with what's done, and do you worry there could be some amount of backtracking? After you're gone, you've decided to kill the cruel joy that you spoke about in the last policy, but I'm just taking a liberty to ask you the second question.
I don't see why that should be assumed that there would be any backtracking. I think the path is clear. There has been substantial cooperation all along the way between the government and the RBI on this. The banks know what needs to be done. The promoters know what needs to be done. And therefore, I would think that it's a process of doing it as opposed to backtracking.
Now that the government has agreed to the inflation targeting, so there are two sentences that you added to the last policy. Is that food prices pushed up the projected inflationary trajectory, and at the same time the risks have tilted to the upside. But you have maintained the inflation forecast at 5%. Is there something uncomfortable that is being left out of the document despite all these risks being flagged off?
No. So we have flagged some risks, but there is, remember, these risks relating to food could be reversed by what we are already seeing as a reasonably good monsoon and the sowing patterns. Now, where we have been a little hesitant is because in the past monsoons, good sowing patterns have been reversed over time because the monsoon has faltered. So until we see the full effects of the monsoon, it would be premature to declare victory, but I think the meteorological department has told us to expect more of the same. Given that, we have some confidence that some of the elements that went up in price, certainly the seasonality in vegetables, but also potentially pulses because of the large sowing in pulses, that some of those prices should come down and should give us the negative impact on inflation, which will offset some of these upside risks that we've talked about. So broadly, we're comfortable that we should be reaching 5%. Of course, there are uncertainties which could emerge.
And you also mentioned about the negative yields in some of the developing economies, sovereign rate. So does that mean that you see a kind of a bond bubble burst?
No, I think those who initially saw the negative yields and were worried about a immediate crash in bond prices were surprised by the fact that the yields went even more negative, and now more yields are trading negative. Is this a healthy and long-term state for the global economy? Probably not. Is it going to collapse tomorrow? Probably not. In our view, the measures we have taken in the RBI were and are justified given the conditions that we have. People can have different judgments, but we have to see, as Mundra Sahab often says, the proof of the pudding is in the eating. Let's see over the next 5-6 years how this plays out, and then we'll reach a judgment whether this was good or bad. Critics are there all the time. There are also people who send me messages in the plane from the back, anonymous notes saying, thank you for what you're doing. So you get both sides. That's part of the job. You have to take it as the costs and the benefits. And I think the most important thing is that at the end of the day, you feel you've made a useful contribution, and that, some people are better off as a result of it. I think from that perspective, this has been a fantastic job. And when I said sometime back when somebody asked me, how has it been? I've enjoyed every minute of it, partly because every day when my sort of fellow colleagues at the RBI and I sit together and work, we manage to move the needle forward a little bit at the end of the day. You leave the office saying, we did something. And there are very few places where you can have that sense of satisfaction. So I think this has been a fantastic experience, and I hope there's some value added.
So we've just heard the man of the moment, Raghuram Rajan himself, and to understand that better, we're going to be joined by Maithili Busnurmat, 18 Hours Consulting Editor. Maithili, thank you so much for joining us here on the show. Tell us, first of all, I want to ask you, did the Reserve Bank of India sound more hawkish in this policy than ever before?
On the issue of whether the RBI sounded more hawkish on inflation, yes, I think reading between the lines clearly seems to suggest that RBI does have worries on the inflation front, because even though the inflation target of 5% by March 2017 has been retained, the RBI clearly says the risks are on the upside, and not only because of food inflation, which it thinks it might be seasonal, but even on the non-food front, it does see clear indications of prices edging up. So certainly the RBI does sound a note of caution as far as inflation is concerned. Clearly, the RBI does have worries on that front.
All right, Maithili, let's now talk about the man of the moment. Tell us, what according to you is Raghuram Rajan's biggest legacy, now that he's got just about 28 days left as the RBI governor?
On the issue of Governor Rajan's legacy, his biggest legacy clearly must be the seminal change that he has effected in monetary policy formulation, with the RBI now clearly and unambiguously an inflation fighter, inflation targeter, and a monetary policy committee in place. We still have to hear as far as the government's nominees are concerned, but the Monetary Policy Committee is going to replace the governor as a formulating authority for the interest rate target. So that, I think, is another seminal change. Along with inflation targeting, the setting up monetary policy by a committee rather than the individual governor. This, I think, must be his biggest legacy. Apart, of course, ranking second in that order must be the firm attack that he has taken on non-performing assets, big borrowers, regardless of how powerful they are. He's really taken them on, and that, I think, is his second biggest legacy.
All right, Maithili, tell us now that whether is India then prepared for FCNR redemptions according to you?
On the issue of how prepared India is for the FCNRB redemptions. I think here the government, the governor and the Reserve Bank of India, all three have been very lucky because post-Brexit we've seen a flood of money coming into India, and that has really helped strengthen the Indian rupee vis-a-vis the US dollar. So even if there are some redemptions, and right now it does look as if a larger part than before is likely to be rolled over post-Brexit than before, we have the strength, we have the forex reserves that the governor has mentioned again, sizable forex reserves, over $360 billion. So I think FCNRB worries are largely on the back burner, partly because the RBI has been well prepared for them, partly because of fortuitous turn of events. So as far as FCNRB is concerned, I think we need not worry too much on that score.
All right, Maithili, one last thing before we let you go. Tell us, did the RBI seem to have any concerns about growth going forward, considering nothing was, none of the projections on that front have been changed as well?
On the growth front, the RBI doesn't seem to have too many concerns at the moment. It's stuck to that 7.6% GDP target for this year. But better still, it talks about a recovery, in green shoots of recovery, particularly in the manufacturing sector. And that, along with good monsoons this year, should, if at all, give you an upside to growth rather than a downside. So on the growth front, I think there are very few concerns as of now. On the inflation front, yes, there are some concerns, but overall, the position looks pretty good.
All right, Maithili Busnulma, the ET Now's consulting editor, thank you so much for taking time out to be with us here on this very special show, The Final Act on Raghuram Rajan. Time now to get you some more expert opinions on what they made of Governor Rajan's commentary today and, more importantly, the road ahead for the Indian economy. Take a look.
Given the stance on the liquidity that the RBI projected and the front loading of the liquidity accommodation that the RBI is talking of, we could still see a little bit more sort of downward trajectory in terms of the bond yields going forward to about, say, a 7%. The critical factor also remains the September US policy, where we are actually expecting the US to actually move rates, which necessarily means that the correlation that we have seen of late between the US 10-year and the India 10-year could actually sort of come to an end, whereby I mean that the US 10-year could be rising at a slightly abrupt rate, which necessarily means that the India 10-year could also be rising. I think the more crucial issue now remains is the announcement of the name of the new governor and the three other members of the MPC. The current governor was working with a glide path first for a 6% inflation which was achieved. And therefore, he sort of moved in with incremental rate cutting momentum. The next glide path was a 5%, and in this policy, he is very categorically pointing out that there are upside risks to the 5% inflation target. So, if this governor would have sort of continued even within the structure of the MPC, I don't think from a guidance factor and from an overall sort of a standpoint perspective, the market would not have basically looked at any further drop in the interest rates. Now, having said that, I think the target that the government has handed over to the RBI continues to be 4 ± 2. But if the glide path can be relaxed, and that is why I mentioned that the tone and the communication of the new governor also becomes quite important in terms of the journey of the bond yields. So if that is relaxed, then you could possibly see a little bit of incremental room opening up in the minds of the bond players from the current position.
Bank's point of view, they also have to protect their margin, and there is a relentless push from RBI on them to pass the borrowing cost to the consumer, to the borrowers, and I think it's a healthy friction. RBI is relentlessly pursuing it and banks are reluctantly passing it on to the consumers. I think that's the way it should be, and hopefully there will be lower borrowing cost for the consumers as the liquidity keeps on improving in the economy. But for me, the last lines of him were very good, where he said that we are transiting towards a middle income economy, and the work which they have done in last 3 years will be witnessed over next 4 or 5 years. I think 3-year term for RBI governor is too short to predict, too short to forecast what he has done, and it's over longer term tenure of next 4 or 5 years. We will see the benefits of all the groundwork done at RBI during his tenure. Markets have already factored in one rate cut. Now, whether that comes in October policy or after that, that should give sufficient cushion to the market. The second is the open market operations by the RBI. They have already done about 80,000 crore worth of OMOs. One more OMO is announced as of today. So that's going to take the supply pressure of the government borrowing. And this year the fiscal deficit has also come down from 3.9% to 3.5%. So lower supply intervention by RBI through OMO, globally supportive yield rally, even countries whose name we haven't heard, those bonds have started rallying. India is a far better credit than many of those countries like Guatemala and so on and so forth. So put all these things together, we do believe rates will remain on the softer side.
Banks are being unfairly blamed for not passing on the lower interest rate benefits. See, if you look at the bank's balance sheet, only about 1% of our borrowings are from the market or from the RBI related rates actually. Bulk of our funds are basically the deposits that we raise actually, and there is definitely a transmission delay. The cost of funds for the banks have to come down before the banks can actually start passing on those benefits. Once now that the liquidity in the system becomes good actually, and the banks are able to reduce their deposit rate further, so that will automatically lead to a transmission by way of a lower MCLR. I don't really see much of a problem happening there. I think the formula unnecessarily binds the hands of the banks also. I think the Governor Rajan also mentioned in one of the interviews that MCLR is only a transitory mechanism. Ultimately, I think it should be the competition which should be driving it. I guess sooner we move to a system like that, it's better, because in that case, the banks do get much more flexibility. Slight pickup actually. So some of it is happening in terms of better capacity utilization. And some of the stress sectors where some projects were stuck actually, some of them have got going actually. So those are the kind of things that we are seeing actually. Not really, ultimately for us to look at the credit demand coming in, we would like to see some huge capex happening actually. New projects, I think practically nothing on the new projects actually. So even the existing projects, so I don't really see too much of capacity expansions happening actually.
Now, as Raghuram Rajan's stint on Mint Street comes to an end in under a month, the race for his successor is heating up. Is there a front runner yet? We have ET Now's Chief Editor News, Supriya Srinath, joining us with some exclusive details on that front. Supriya, tell us, who is the likely successor and by when is it likely to be announced?
So what we've been given to understand at this stage is that Subir Gokar is perhaps the front runner for the top job at Mint Street. But remember, he's not the only one in the fray just yet, because Prime Minister Modi will finally make that call. Of course, the decision will be discussed with Finance Minister Jaitley, but it will be an eventual call that the Prime Minister himself will take. We've been given to understand at this stage that Subir Gokar's overall view of macros, his overall understanding of macroeconomy, put together, the global exposure that he has does tilt the scale in his favor. But like I said, he's not the only one in the fray. We've got a Shaktikanta Das, we've got an Arvind Subramanian, and we've got the Deputy Governor Urjit Patel as well in the reckoning. But at this stage, it looks like Subir Gokar could well be the front runner for the top job. A final decision will perhaps be taken by the middle of August, because the government will be keen to have some sort of an overlap between the incoming and the outgoing RBI governor. It's standard practice. It was done in the case of Raghuram Rajan or Subba Rao or YV Reddy and all of those people. So this is standard practice. Remember, in over 3 decades time, Raghuram Rajan is perhaps the only RBI governor who's not going to serve a 5-year term. He's going to serve only a 3-year term, because he's decided to go back to academics in Chicago when his term does expire on the 4th of September. Also at this stage, it's important to tell our viewers this isn't a done deal. Even though we are telling that Subir Gokar could well be the man at the helm of affairs, but these are just indications that we're picking up from our top sources in the government right now. The final decision, like I said, will be taken by only the Prime Minister, and anything can happen in this government. So we've got to tell our viewers that you need to keep that caveat aside. I mean, we all thought Nitin Patel will be the Chief Minister of Gujarat, and overnight that decision changed to Mr. Rupani. So it's important to remember that at this point in time, 4 names in the fray, but Subir Gokar seems to have the scales tilted in his favor.
Thank you, Supriya, for bringing us the exclusive details on who is set to be Raghuram Rajan's successor at the Reserve Bank of India. And with that, we wrap things up here on The Final Act. Thank you so much for watching. This is Krishna Kumar signing off.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.